Welcome to the deep dive. Today, we're taking a closer look at a really pivotal week for crypto and blockchain. We're talking July 14th to July 20th, 2025.
Yeah, quite a week.
It really felt like a period of, well, absolute fireworks. Things moving fast in digital finance. We're going to unpack some huge movements, Bitcoin hitting a new high, some big legislative steps in the U.S., Grayscale's SEC filing,
Right.
but also, the other side. The volatility, the risks, like that whole pump.fun saga.
And it's important to see that beneath those headlines, there are these deeper forces. Regulatory changes in D.C., global stuff. Our job today, really, is to help you cut through all that noise, get to the why behind the what, understand where things are genuinely heading.
Okay, let's dive in. The big one first, Bitcoin. It hit what, around $123,153 on July 14th, an all-time high. What exactly drove that surge? I mean, we saw huge ETF inflows, right? About $3.4 billion early in July.
Yeah, those inflows were definitely a factor.
And there was that buzz around Crypto Week in the U.S. too.
Absolutely.
Yeah.
But what's really fascinating, if you look closely, is that the analysis suggests this wasn't just sort of speculative froth. It points towards Bitcoin potentially pivoting, moving from just a speculative asset to maybe a global reserve candidate.
Really?
Yeah, fueled by those big institutional ETF inflows you mentioned, and also adoption by, what is it, over 135 public companies now. It feels like a pretty fundamental shift in how the market sees it,
Yeah.
moving beyond just, individuals betting on the price.
Okay, so speaking of the U.S., let's shift to policy. Crypto Week in Congress, July 14th to 18th. That seemed like a real turning point for integrating crypto more, didn't it?
It really did.
We saw the House debating advancing key bills, the Genius Act for stablecoins, the Clarity Act trying to clear up how securities laws apply to digital assets, and even blocking a Fed-issued CBDC.
And if you connect those dots, the Genius Act getting signed by President Trump on the 18th, that's a major milestone. Huge. It sets up a federal framework for stablecoins. Things like reserves, consumer protections, crucial stuff. It's a clear signal, isn't it? A strong intent to bring stablecoins into the regulated fold. That provides a lot more clarity and, well, confidence for the whole system.
And then on the industry side, Grayscale made that big move. Filing confidentially with the SEC for a U.S. listing, they manage, what, around $33 billion?
Yeah, a huge amount.
Seems like they're trying to ride this wave of optimism and the policy momentum.
Definitely a strategic move.
Yeah.
And it also ties into this whole regulatory discussion, right? You had SEC Commissioner Hester Pierce clarifying things around then, too. She basically said, look, tokenizing a security doesn't mean it stops being a security.
Okay.
Her point was, the tech doesn't let you sidestep the existing rules. Investor protections still apply, no matter if it's on a blockchain or not.
So innovation's fine, but the rules are the rules.
Exactly. It's the balance regulators are trying to strike. Not stifle tech, but keep protections in place.
And zooming out, this isn't just happening in the U.S., is it? We're seeing countries like Pakistan, Bhutan, the UAE, they're actively weaving blockchain into national plans.
Right, for diplomacy, economic resilience.
Which really contrasts with, say, India's more cautious stance, that sort of crypto Cold War idea. So what's the global takeaway here?
Well, it looks like we're seeing a kind of geopolitical fault line emerging around this tech. You've got some nations really embracing blockchain as a strategic asset for growth, for security, and others holding back, being much more wary. That difference, that contrast between proactive integration and the Cold War approach, it suggests we might be heading towards, I don't know, maybe two different digital economic spheres, nations aligning based on how they see this technology.
Interesting. Okay, but like we said, it wasn't all smooth sailing or positive news.
No, definitely not.
The pump.fun token saga, a sharp reminder about volatility, right? What exactly happened there?
Yeah, the PUMP token.
It dropped, what, 37% almost right after its ICO?
Yeah.
Within 24 hours?
Pretty dramatic.
Even though there was that temporary lift, like 20%
Yeah.
from an $18 million buyback, critics were still pointing to deep fragility and widening whale dominance. What does that whale dominance actually mean in practice?
Right. Well, that whole episode just screams speculation, doesn't it? And how precarious these new launches can be. Whale dominance basically means a few big holders, the whales, control a huge chunk of the token supply.
Okay.
And that makes things incredibly volatile. If one of those whales decides to sell or even buy big, it can just completely swing the price.
So huge risk.
Exactly. It's a reminder that, yeah, there are chances for quick gains, but the risks are massive.
Yeah.
Especially in these, let's say, less mature parts of the market. It really highlights that tension between innovation and needing solid oversight to protect people.
And that brings us to the bigger issue of, well, illicit activity, still a major headache for crypto.
Always lurking, yeah.
The FATF, the Financial Action Task Force, put out a report, said only 40 out of 138 countries are actually meeting anti-money laundering standards for crypto.
That's not great.
And they flagged $51 billion in illicit crypto transactions just in 2024. $51 billion. They're pushing hard for stronger global safeguards.
That number, $51 billion, it's just staggering, isn't it?
It really is.
It just underlines how urgently we need a more unified, effective global response from regulators, because the tech itself, blockchain, it's transparent, but the pseudonymity, that can be exploited. So you absolutely need international cooperation to stop it being used for crime and, protect the financial system's integrity.
Matching global tech with global rules.
That's the challenge. Yeah.
And then there's, well, a darker side that's becoming more apparent. Physical attacks on crypto holders are reportedly surging.
This is really sobering stuff.
Yeah, over 230 kidnappings, home invasions, specifically targeting crypto investors in the last 18 months or so.
Wow.
And apparently it's driving demand for private securities specialized insurance. It's a scary thought. Digital wealth leading to real-world physical danger.
It really makes you think, doesn't it? For
Yeah.
anyone involved in this space, as the value of digital assets goes up, the risks increase too. And not just digital risks like getting hacked, but actual physical risks.
Yeah.
The harsh truth, becoming wealthy, especially in a new, high-profile way like crypto, can unfortunately make you a target. It just highlights how critical security is. Not just, strong passwords and cold storage for your crypto, but actual personal safety measures. And being really careful, due diligence is key.
So knowledge is power.
But security, in every sense, is just as vital.
Absolutely.
So, bringing it all together,
Yeah.
what a week. Bitcoin soaring, major legislative steps forward, but then these stark reminders about fragility, volatility, and even physical danger.
Yeah.
It really feels like we're deep in the next phase of digital finance now. It's not just evolving anymore, it's kind of transforming right in front of us. I think that's right. This week really showed it vividly, didn't it? The future of finance is being written, like right now. It's this mix of incredible innovation and the necessary regulation trying to catch up. Huge opportunity, but also, as we've seen, significant risk. And it leaves you, the listener, with this really compelling question, I think. How is this balance, this tension between all these forces going to shape the next decade of this digital frontier? And maybe more importantly, what role will you play in understanding it, navigating it?
A really powerful thought to end on. To you, our listener, thanks, as always, for joining us on this deep dive. Stay informed, stay smart, and maybe most importantly after today's discussion, stay secure. Because in this space, moving this fast, the edge really does go to those who pay attention.